Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about gap trading, specifically the morning gaps. In my course at LazyGapTrader.com, I teach two specific gap trading strategies. One is the morning gaps, which we're going to talk about in detail right now. And the second is a gap fill strategy where we can identify stocks that are coming back to fill gaps left open from a prior day's closing price. Both these two strategies within the gap trading methodology are an absolute license to print money. Gap trading is by far the single best day trading strategy available in the markets today. So in my course, I teach the morning gaps and the gap fill strategy in detail. Everything you need to know to be successful trading the gaps is found in my course. The second thing I do is I provide to members who wish to get them my gap trading levels each and every day. What we're going to do now is take a look at the email that went out to subscribers about 9 a.m. Eastern Standard Time, about 30 minutes before the market opened for the day. This morning, there were 4 potential gap trading opportunities, and I list them out here: JKS, AGIO, RGR, and BUFF. Out of the 4, one stock hit its level, and the other 3 did not reach their specified levels, so they become no trades. No harm, no foul. We're only interested in trades that come to specific price levels, giving us an opportunity and the highest probability for success. If a stock doesn't reach its level, we don't want it. So the one that hit its level today was Sturm Ruger, RGR. So there was a couple of things that happened this morning with this stock. Number one, you can see I specify it's a gap higher. Resistance levels are $60.59 and $61.29. And then I list out a stop and profit target is about 45 to 50 cents. But what happened was, after the email went out to subscribers, the stock started to move over and above the levels I specified in this email that you see here. So there's a couple of things with that. Members that have taken the course understand exactly what to do with stocks that are opening above a gap level, for example. If a stock begins to move before the open, like this morning, sometimes I have a little bit of time left in order to get an updated email out to subscribers, giving them an updated resistance point in this example. Here's that updated email that went out. I say, RGR, be careful, the stock moved since the original gap trades went out. Better resistance levels are, I repeat the first one, or the second one actually, 61.29, and then I gave another level of 62.46. Remember, if RGR opens above either of the resistance levels, we look for the next one. So let's go ahead and take a look at RGR right now, and keep in mind the $62.46 price. That was the last line of defense that I gave in the subsequent email from this morning. Now, the purple lines on the chart represent the 3 total levels that I had given: $60.59, $61.29, and $62.46. Now, let's take a look at the power of these levels. There's a couple of things going on this chart that I want to point out. The first thing is the stock opened above the first 2 levels, level number 1, level number 2. And the stock opened in between level number 2 and level number 3. So with that, and it's taught in the course, we're looking only at level number 3 at this point in the game. We're looking at the $62.46 number, and what happened was the stock came up to that level in the first 10-minute candle of the day. In the second 10-minute candle of the day, you can see the stock went a little bit higher, but yet stayed within our recommended stop-loss limitation. And then you can see what happened. After about 30 minutes, the stock came right down, ironically enough, and there are no coincidences in the market, to test the $61.29 level that was given in the first email, and the second email for that matter. So right on this chart, you can see the power of 2 levels. Number 1 is the level of 62.46 that held, and the stock sold off from that level, making a low of 61.29 within about 30 minutes from the original level. That represents about a $1.17 maximum gain in the pullback that occurred from the $62.46 level. Then the stock pulls right into the 61.29, representing the second most important level, and there are no coincidences in the market. It's really just mathematics at work, And in my course, I teach you exactly how to calculate these levels, figure out where the highest probability level a stock will either bounce from, meaning a stock is gapping down at the open, where that stock is likely to find support, or on the flip side, if a stock is gapping higher at the open, where is that price level where the stock is most likely to experience a pullback, paving the way for a short sale. As you can see, the stock pulled back to the 61.29, then proceeded higher again, going through our original level. But we don't care. The trade is over. We're out of the trade by that point in time, and in my course, I teach you exactly how to manage these trades and how to approach the trades for the maximum amount of profitability that you can achieve. So here was another great example of a price level that worked out. I teach you everything you need to know inside the course, how to do this for yourself each and every day. You have to come over, check out the course. It's really a license to print money. It's a license to realize the type of profitability and the level of trading that you deserve. Come over, check out lazygaptrader.com. Come see for yourself everything that's going on inside this course and what I teach you exactly how to do for yourself each and every day. I'm David Frost, lazygaptrader.com. Thanks for tuning in, folks.